Hey everyone, welcome back to Corporate Decoder, the place where we dust off those corporate filings. Today we are decoding a Form 10K, but not just any 10K. This one involves a company that had a drug approved for a fatal disease, but then voluntarily pulled it off the market. So grab your decoder rings because we're about to dive deep into Amylyx Pharmaceuticals. This report is like a roller coaster because it has some big ups and downs, but the main storyline involves Amylyx halting the sale of their flagship product, Relyvrio, which was used to treat ALS, also known as Lou Gehrig's disease. They made this difficult decision after new clinical trial data showed the drug wasn't as effective as hoped. That is a tough pill to swallow, especially after all the work and hope surrounding the drug, so let's dig in and see what's going on. This is a Form 10K, basically an annual report where companies tell the SEC and investors how they did and what's been going on, so let's jump in. First up, like all these reports, there's a section about forward-looking statements. Basically, Amylyx is reminding everyone that they're making educated guesses about the future, but things can change. Amylyx is still hustling, trying to make a difference in treating tough diseases, with efforts focused on neurodegenerative and endocrine conditions. Their lead hope now is avexitide, a drug they're testing for a rare blood sugar problem that can happen after certain weight loss surgeries. It's also being looked at for a rare disease in babies that causes low blood sugar. They are working on AMX0035, their oral drug for Wolfram syndrome and progressive supranuclear palsy, plus AMX0114 for ALS. The update on Wolfram syndrome from their Phase 2 trial is generating some buzz since those early results are positive. They've also begun a pretty large Phase 2-3 trial of AMX0035 for PSP. It will be interesting to see if that works out because the unblinded interim analysis is coming up this year. Now, Amylyx isn't alone in this space. They're up against some big names in the drug world. These giants have deeper pockets and more resources, so it's a tough battle and Amylyx needs to make sure their products stand out. Protecting their intellectual property is vital for Amylyx. They've got a bunch of patents in the works for their drugs. They are making sure their drug formulas are under lock and key. Like any drug company, Amylyx has to play by the government's rules. The FDA is involved every step of the way from testing to approval. If they don't follow the rules, it could mean big trouble. Digging into the financials, we find that the value of the company's stock held by non-company folks on June 30, 2024 was about $117.6 million. As of late February 2025, there were about 88.6 million shares floating around. Moving into the business segment of this report, their investigational assets are progressing slowly. They are trying to keep their business running, but it is all going to be very costly. Here's where things get real. The report details what Amylyx sees as its biggest risks. These are the things that could throw them off course. Some are related to their own money situation, others have to do with drug development and depend on third parties that they rely on. Intellectual property and the volatility of their stock are also high on that list. They expect expenses to go way up if their drugs get approved. As they keep running trials and trying to get new drugs on the market, they're going to need a lot more cash. The ability for them to get loans is also a major risk for their ability to operate. As for drug development, they are betting heavily on avexitide for PBH and AMX0035. They must successfully run late-stage trials, get those drugs approved, and sell them, or they will have problems, they noted in the report. Another aspect to keep in mind is access to investigational drugs. There's a ton of pressure to provide drugs to people who are really sick, but these treatments aren't approved yet. There is always a risk. There's a complex web of healthcare laws and regulations they need to navigate. It would be hard to make a business deal without running into some legal complication. Laws like anti-kickback statutes and HIPAA can make business practices very tricky and can even lead to government scrutiny. The report states they had 123 full-time employees as of the end of 2024. Amylyx is talking about consumer data being affected by the California Consumer Privacy Act, or CCPA, and the fact that it's not yet completely applied to them. It seems like compliance with all of these digital regulations are going to be costly for the company. They note that there has been increased attention to individual patients' expanded access requests. It is noted that the aggregate market value of the company in June 2024 was around $117 million. That is a pretty big drop from a company that had a multi-billion-dollar valuation at one point. Also highlighted are the orphan drug designations that could give marketing exclusivity for a period if the company is successful in those paths. The company goes on to talk about their regulatory process in Europe. If they do plan to distribute there are a whole set of legal obligations that they need to follow and take into account. There's mention that one of the biggest risks is that there could be pressure from political issues. There are lots of uncertainties of these external factors that can affect the business in the future, both here and abroad. The report also touches upon ESG, environmental, social, and governance factors. They have a team and strategy for these ethical elements of business. They care about the planet, being good to their employees, and running things fairly. As for social factors, they mention that diversity is important, including having representation of diverse views and backgrounds at the highest levels of the organization. They highlight their focus on equitable compensation for all employees and upholding the principles of pay equity across all levels of the organization. There's a lot going on here. Let's look at some raw numbers. As of February 2025, there are about 88.6 million shares of their stock out there. This could affect how decisions are made. The report's revenue number is $87 million compared to $380 million the year prior, due to them pulling their drug from the market. The company recognizes its big loss at around $300 million. I would assume this may scare investors. The company also includes a note on the accounting policies that are critical, including their revenue recognition policy, which is quite short since they recognize they're going to be generating close to zero revenue for the foreseeable future. There is also a description of their research and development expenses, as well as accrued expenses. The company also goes over their restructuring plan. They had to end contracts and remove positions. This hurt the company a bit. The FDA's policies could change, and that would make clinical data not sufficient for approval. This could have big effects for Amylyx, for example. The company details a legal entanglement with a patent in Europe. Ultimately, the patent as maintained in limited form has no relevance for PSP or Wolfram syndrome. Brusciatini has no procedural option to broaden the claims at this point. There is nothing else to note, as there has been no adoption, modification, or termination of a Rule 10b 5-to-1 trading arrangement in the period. Okay, so what's the real story here? Amylyx is in a tough spot. They're pivoting after their main product faltered, and that always involves risk. So here's my opinion. Amylyx is clearly facing a major challenge. The discontinuation of Relyvrio has left a big hole in their revenue stream, and they're now relying on their pipeline to pull them through. I think this pivot to new indications for AMX0035 and the development of avexitide and AMX0114 is a bold move, but it's also a risky one. Drug development is a long and uncertain process, and there are no guarantees of success. That dependency on a few key drugs makes them vulnerable. If those trials stumble, they're in trouble. They need those drugs to pass regulatory approvals and be profitable, or else they won't be able to continue operations. On the positive side, their balance sheet is stable and they have a lot of cash for now. They just need to allocate properly. Also, that's a lot of pressure on that executive team. If they lose key people, there's no telling what can happen. In conclusion, Amylyx is at a crossroads. The next couple of years will be critical as they try to rebuild after the Relyvrio setback. A lot depends on the success of their current pipeline and their ability to manage costs. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe. It helps us a lot. Let me know if there are any other SEC filings you want me to decode in the comments below.